All right, thanks for joining me in today's video. And in today's episode, what I want to do is share with you the best option strategy for 2023. And you might say, well, how's that possible? Well, I'm going to answer some thoughts and questions for you regarding this. So stay tuned. All right, so a lot of people are probably wondering, hey, what's the best strategy out there? And I'm going to reveal the secret for you so that way you know what the best option strategy is for 2023, because I've got a hidden secret behind it. Well, case is, hate to break it to you, there is no such thing as best when it comes to trading or investing or in the stock market. And anybody who tells you that, they're probably lying to you or they're trying to get your attention. So when we look at the best option strategy of 2023, it's kind of like saying, what's the best food out there that you could eat? You might like a burger. I have no idea. You might be a salad person. You might say salad is the best food ever. You might say, hey, I like wings. I'm a chicken wing person. So everybody's a little different. And where you fall in the spectrum is going to be different in your case than somebody else's. So the best option strategy for 2023 is going to be the one that you concoctionate for yourself, the one that you create, the one that you make and modify and tweak and evolve to making it better for yourself. So how is it that you do something like this? Well, in this case, what you're looking at is you start with a version or a variation. Let's say I go ahead and, make a burger, something like this. Well, at first you might say, you know what? I like burgers really well done. Why is that? I'm really scared about, diseases and anything like that. So I want to cook it. But then over time you experiment, or by luck of the draw, by accident, you might have something more medium rare. Okay. You might have done it at a restaurant. You would say, well, you know what? I like it like that now. And then you might say, well, you know what? I had some bacon on my burger once. And then I like that. And I like some onions on my burger, or cooked onions. All of a sudden you like that. And then you got avocado and shiitake mushrooms. So with time, you're going to keep adding things to it, tweaking and modifying. So when you start out and you're looking at a strategy, what you might end up having is, look, I do a vertical spread like this. So step one might be at, let's say, a delta of 50. Okay. Then you get in. Why? What is the reason you get in? You get in because of, let's say, a moving average. Okay. Then you profit take at a certain level. Let's say it's 50%. And let's say the days till expiration is 40. Okay. So now you've got a basic version. So this is your version 1. Then do about 20 of these trades. What's your end result? How'd you feel about them? How'd you do? What do you see in them? And then you say, okay, well, what about version 2? Now, what are you going to tweak? Okay. Version 2, you might have some variations. Do that. Version 2, 10, 20 times. Then do version 3, then do version 4. And eventually you'll find something that you really like and makes sense for you. And that's ultimately the best strategy in 2023, is the one that you make, the one that you create, the one that makes sense for you. After all, every strategy is unique. Now, there are some strategies that may be a little bit better for bullish markets than bearish markets. For example, if we're talking about a covered call strategy, or selling puts, well, now you're getting into some specifics. Let's say we're talking about selling puts. Well, that on its own is a bullish strategy, okay? Because now I'm specific in also direction. Selling puts is directional for bullish strategies. But if I say instead of selling puts, well, what about just selling premium single options? Well, in that case now, it may not be just selling puts. It's selling premiums a good strategy in these conditions. So with time, what's going to happen is you'll evolve your strategy. Well, if I'm selling premium, it might not just be the puts. It might actually be also the calls. And now you've got non-directional strategies. If you're talking about covered calls, well, that's very similar to selling a put. It's the same strategy. It's just you're starting over here. Okay. And again, this is a much more bullish strategy, covered calls. But you do realize you could short things as well and have a kind of a covered put on the other side. So what I'm saying is that when we look at selling premium or looking at any strategy, you have to take it into account that what makes sense for you is going to be a little different for somebody else. You might say, well, that guy thinks butterflies are the best strategy in the whole wide world. So as I look into, let's say, this account, you might say, hey, I like butterflies. I like calendars. I like long investing. Here, I got a bunch of stock in this portfolio. Well, in that case, when we have a lot of different stock, you might say, well, selling stocks or having stock is the best thing. So, but what if I don't know how to trade butterflies? What if I don't know how to trade iron condors? Well, in that case, well, you can't do butterflies. I can't say it's the best strategy for you because you don't know how to do butterflies or iron condors. So what you have to do is look at what you have available to you, the tools you have available, the knowledge, the know-how, and then you can tweak it based on your personal style and needs. And ultimately, it's really something you have to work on, because anything you look at and you say, hey, this is the best, well, the best is going to be relative to what makes sense for you, for your experience, your risk style, and so on. Yes, the market does go up at times. It pulls back at times. It goes sideways. But what you have to do is look at what are the strategies you are capable of doing. And in that case, if that's what you can do, well, you might just limit yourself if the conditions are not set up accordingly for that. So be very careful and mindful if somebody says this is the best strategy for 2023. Really, it comes down to risk management. And even if the strategy itself is, not working for you in that case, you might just need to modify it. So take, for example, something as simple as an iron condor. And let's go in and let's say we're doing an iron condor on Google. Remember, an iron condor doesn't have to be non-directional. If I go into Google here, and we say, I'm going to sell this one, buy this one, and then I'll sell this one. Let's do this one, buy this one. Okay, now I've got myself an iron condor concoction or creation. I've got some shares in there, but here we go. High positions. So I've got an iron condor. We'll do 20 contracts. Voila. Look, I've got an iron condor. It's non-directional. But what if all of a sudden I go ahead and customize it, and now I tweak the spread, and I tweak and I say, hey, you know what? I'm going to do 30 puts, and I'm going to do leave the call side at 20. Now I've got a little bit more of a bullish iron condor. What if I add an extra call on this side or a few extra calls? Now I've got a whole different animal. So my point to you is that when you start looking at these kinds of things, understand that everybody can talk about the best strategy for them for 2023. It's going to be the same videos for 2024, 2025, and so on. And a lot of that is to get some attention. But the reality is when it comes to option trading, the concepts and basics are still going to be the same. They've been the same for many years. And best is only going to be relative to, is the strategy that you're putting on a little more bullish, like in this case is a little more bullish, but you could create an iron condor that's also a little more bearish or a little more non-directional. Just in the same way that when you look at cooking a burger, okay, do you like it well done, medium rare, and so on? Do you like mushrooms on your burger, onions, or bacon? For everybody, it's going to be a little bit different. Depending on how you construct your burger, for you, you might like it with onions or without. You might like it with bacon and without. You might like it well done or medium rare. And that's the same thing when it comes to strategies here. You might like iron condors, but when you look at iron condors, if the market doesn't fit with that, then you won't get as great of results. So that's what's important to do. And if you're constantly looking for the best strategy of anything, there's no such thing in the market as far as best goes. What you're doing is trading one for another, one risk for another. So if I want a little bit more of a bullish iron condor, what I'm doing is creating more risk if it goes against me to the downside. Or maybe I'm reducing my theta. So that's what I want you to think about. Anyway, I hope that helps. Definitely check out our website if you're interested to learn more about trading options, puts, calls, verticals. There's a lot of stuff on courses, on those kinds of things in the courses section. And you can check out also the coaching section over here if you like to learn a little more one-on-one. Just go into the coaching section and then check out some of those things where there's some single video coachings that you can take a look at, or even trading together for 3, 6, or 9 months at a time. So anyway, I hope that helps, opens your mind up a little bit more about the realistic concept of the best in anything really in the world. But more so for option trading, is that you're always trading one thing for another. And if you're getting a benefit of, hey, a high return, well, there's probably additional risk that's also being created when you're doing something like that. So thanks for joining me. Truly appreciate it. Enjoy the rest of the week ahead, and I'll see you next time.